Welcome back. This is Seewing Yee, and my co-host is Julie. How are you, Julie?
Fine, thank you, Seewing. How are you this morning?
Very good. Today, we are going to talk about how to invest in multi-units. Okay.
Mhm.
I don't care whether you are a newbie
Like
investor
that.
or a experienced investor. If you want to scale your portfolio fairly quickly, and you'd be surprised, this strategy is very much doable. It does not
Mhm.
require tons of money to create a multi-unit portfolio. So
Right.
let's go ahead and without further ado and dive in. All right. So
Mhm.
portfolio is in Buffalo-Niagara Falls, something that we've been investing. Julie also and a number of our investors over the past few years have invested in this turnkey market. Is this kind of listings are off market. Go through our network. You have access to these great listings. It's not in the multiple listing service. This Buffalo
Mhm.
Turnkey, this turnkey provider, they find the deals. They buy properties very under market value. They,
Yes.
they use their own rehab crews to fix up the property, and they make a turnkey, and then they sell it to retail investors like us from
Mhm.
all over the part of the US and all over the world actually come to this particular turnkey provider to buy properties, mostly remotely sight unseen because this turnkey provider, Buffalo Turnkey, been around for 30 years. So Julie, and of course, everybody trusts them. So people have done
Sure.
very well, including yourself. Can you quickly go over how do you how do you able to scale your portfolio using this particular turnkey provider and the methodology?
Oh, wow. I think the best thing that we could have done was connected with Buffalo Turnkey because they are quote unquote a one-stop shop. They have the young man that I work with, Caleb. He's one of the owners, one of the sons of the owner of the business. It's a family business. I really appreciate that. I grew up in a family business and we just developed relationship. We built relationship. We would look at their properties every week or every few days actually until we could find what we wanted. And then once we found it, we really worked closely with them in the whole process of going through the escrow, the inspection, all that. And it sounds like a lot, but it really is not. It's really very simplistic once you get the contract. And the nice thing about it, you're not competing against a whole bunch of other investors or because as you had mentioned, these are off market properties. So you see the property you like, you tell them that's the one you want and it's yours. It's that simple. So anybody that's tried to buy a property in through the MLS or whatever, you have all these competing buyers and the price is going up and we're selling to the highest bidder. None of that. They price their properties very fairly. In fact, a couple of them that we purchased were below market because they actually appraised higher
Yep.
than what they were selling it for. So that was a plus for us. So I like the fact that they're not trying to gouge their investors. They're getting, I'm sure they're making money. They're not in business to not make money, but they are also setting the investors up that are buying from them so that we can make money as well. And yeah, and so we worked with the same contact person, Caleb Kanazi, and went through all six of our properties. And once you develop that relationship, that's the best thing. When I first started getting into this, they talked about relationship. It's really about finding the right. It's not even so much about the right area, this and that. You got to get the right contacts in place. And I think by going through your network, you really set us up to be able to do that successfully.
Yep. Well said, Julie. Your portfolio, six property portfolio that you and your husband Mark are able to pull the trigger 3 years ago, and to your surprise, yeah, you made a lot of money in this market. But your journey continues, right?
Oh, absolutely, 100%.
I just thought of it. There's one objection that one of my investor I just consulted with the other day.
Mhm.
Something that we never brought up. So I want you to answer it since.
Mhm. Mhm.
So his question was, in the state of New York, is not a landlord friendly state.
Correct.
So Julie, how do you overcome this particular objection?
I think there are landlord-friendly states and there are tenant-friendly states. We live in a tenant-friendly state. I get the process that you have to go through, but I think that one thing with the property managers that we work with, they really work hard to vet the tenants that they have because they have such a pool of tenants wanting to buy this, wanting to rent these properties. We have had a lot of success. Not that we haven't had any vacancies. No, I've had to do one eviction. But again, with the turnkey provider and everything set up in place with the property management, we don't have to worry about a thing. They let you know ahead of time what they will do, they handle it. So I'm not sitting here worried like, oh, I got to get the tenant out. I got to call the marshals to get them out of however, whatever the process is. So yeah, I think it just is part of the business. You're going to be in a tenant friendly state or a landlord friendly state, but kind of really doesn't matter if you're getting quality tenants. It really doesn't matter.
Julie, 100% I agree with you. Some investors, they have this potential red flag. Oh, I would never invest in a tenant-friendly state because if they could stay at your property and not pay rent for the next 2 years because they know the landlord-tenant laws and this and that. But what they fail to realize is more to it than that.
It's so much more to it.
And I'm not going to repeat it. You would just describe it. As long as the property manager vet the proper tenant from the get-go in the first place, you're not going to have this prolonged vacancies because
right.
And all that. And you just clearly describe them. You just experience over the past few years. It's not an issue. So
it's not an issue. And the benefit of buying more than one is that you may have one that's empty or vacant or going through an eviction. We've got 5 others that are producing.
exactly.
It balances itself out.
Oh, absolutely. I'm very satisfied with your answer. Anybody rationally, logically hearing what you just said will have to conclude that it is not an issue. Okay.
Again, I think I want not to belabor the point, but it's the cost of doing business. I think if you're looking to really invest, all those objections go out the window. You do a calculator risk. Like I said, I'm a researcher, so I did my homework. I did my due diligence. I understood the risk. Nothing is perfect. But and that is just the cost of doing business. If you're going to own property, just like a grocery store, they build in shrinkage because they know the customers are going to steal, the employees are going to steal, and they're just going to have stuff come up missing. That's the cost of doing business. So you factor that in. But I think, if you're on the fence or you have so much fear, you can find any reason to not buy. Oh, it's a tenant-friendly state. It's not a landlord-friendly state. And
you're right. A prospective investor can come up with 1,000 excuses.
Exactly.
And anyway, okay.
I just got carried away. But it's like, yeah, just do it. Stop making excuses and just do it.
Just made some powerful statements, Julie. This one of the reasons why I invite you back every single week to do a joint podcast. Because you are speaking from the horse's mouth. You represent all the other investors out there or in your shoes.
Absolutely.
And many of them are newbie investors. They have fear. They're afraid to pull the trigger. You were in position 3 years ago. You were a completely newbie 3 years ago.
Complete new. Yes, absolutely.
All through your lifetime, I'm not going to disclose your age, but you, like me, or baby.
We waited late. I waited late. We waited late. We can say it. Yeah.
You are a late starter, and yet you overcame fear 3 years ago. You had no properties, no rental properties 3 years ago, and now you have 6 rental property portfolios in Buffalo-Niagara Falls, earning increasing passive income,
absolutely,
increasing appreciation, increasing rent, low maintenance, low vacancy issues, and now you are sitting pretty, right?
Absolutely. And we bought it, talking about fear, we bought it at the height of the pandemic when there was fear circling worldwide everywhere. Everybody was afraid. You were afraid to like sit next to somebody in church. But, so there was just a lot of fear out there. But we just pushed past the fear and just pull the trigger. Yeah. And I think you just have to do that. You can't worry about if it's a tenant-friendly state or landlord-friendly state. Who cares? You know what? Really, just buy it. Pull the trigger.
Exactly. Yeah. Of course, you have to do a research and due diligence. And
absolutely.
Don't trust. You trust us, but verify. Trust, but verify.
Absolutely.
Yeah. What you just said a moment ago really is resonating with me because remember at the beginning of the pandemic, there was so much fear. There's so much chaos, not only in a U.S. economy, but
just all over the world.
And a number of investors and home buyers back in late 2020 and entire year 2021 and the first half of the 2022, they pulled the trigger and they achieved 30, 40, 50% appreciation. Everybody thought the housing market going to crash, the economy going to recession because of the pandemic. And yet the opposite was
Absolutely. Absolutely. 100%.
So if we fast forward to today,
Mhm.
2024,
Mhm.
not as dramatic as back in 3 years ago, right?
Sure.
In terms of fear, you and I talk about this quite often. We continue to see people staying on the sideline and they come up with kind of monumental excuses not to take action.
Yeah.
But to you and I, right now is a great time to buy.
Absolutely. Always. Mhm.
Yeah. So Julie, quickly, real quick, why do you think any given moment, whether it's right now, October 2024, or back in 2021, as an investor, you should buy? So,
Absolutely. It's so interesting because I remember when we first started talking to you, and I'm just one of these people. I like to tell people what we're doing. So I'm telling all my friends, oh, we talked to this guy and he's going to do this. And we have all of that. And people are looking at me like a side eye, like, do you even know what you're talking about? But my close friends that know me know I do my due diligence. And now those same friends that were just observing and watching are blown away because now we're like 3, 4 years out and we've owned them. They're successful. We bought 6 properties and everybody that knows us know we had 0 properties when we first started. And I think they wish they would have like jumped in when I jumped in instead of waiting the 4 years. And as you say, there's opportunity in every market. But we've been able to take advantage of the last 3 years, 3 to 4 years at a time. Like I said, it was very scary in the pandemic, during the pandemic. And we just took advantage and we pulled the trigger.
yep. Yep.
Mhm.
And the rest is history.
Absolutely. 100%. Yeah.
Very well said. We should make a short out of this, a short video out of this. Okay. Let me do that. Okay, let's continue. Well, this week's listing, by the way, okay,
Oh,
we're promoting this week's listing from Buffalo Turnkey, Buffalo-Niagara Falls. And so here it is. Okay. On the previous week, we discussed about single family home, rental property, turnkey, very, very high cash flow. So today we're going to, and these numbers, we're not going to lie. This is real numbers.
mhm.
Real property is available right now. We have this Buffalo Turnkey have these types of property on a
Mhm.
consistent basis, week over week. There are similar properties just like this. Okay, full
Right.
duplex, triplex, all turnkey, all rehab properly, all rented, and come up from a turnkey provider, as we mentioned, been doing this for 30 years. In 30 years in the
Wow.
market, they know every neighborhood, every corner in
Mhm.
Niagara Falls. They find the right deals for us to do well. Okay.
Mhm.
And of course, you have several multi-units as well, you and Mark. So
Yes. Yes. And that's a great deal right there, though. I'm just like, my eyes immediately go to the cash flow. I'm like, $831 in cash flow every month. That's life changing money for some people. It really is.
this is absolutely mind-boggling. So
Mhm.
it took me to be true. Okay. Look, from all those real estate gurus out there, the YouTube content creator, they keep saying,
Right.
and not cash flow anymore, skyrocketing home prices and this and that. High
Mhm.
elevated mortgage rate has pretty much put everybody in sidelines. Investors don't do anything because you cannot cash flow. To that, what do you say?
Yes, you can. Even the rent of it, I'm like so excited about this property. The rent to value, you've got a 1% rent to value, better than 1%
Yeah, 1 point.
on a fourplex. That is amazing.
Look at this price. 173 in California, where you and I live. You cannot get a garage
I
door.
don't think that would be the down payment on a fourplex here in California.
Not even. This is about payment on a single family home in California.
Yes. Yeah. Absolutely.
But
Mhm.
since you are a savvy investor already, would you mind over the, I know, I think go over the numbers. Go over
Oh my gosh. Just looking at the price, first of all, like you said, you can't buy a single family home, not in the area that I live in. You can't buy a single family home for $174,000. And here you have a fourplex. You're putting down a 25% down payment, $43,000. That's a huge, and then adding on the cost. And initial cost is less than 50,000.
right.
Less than 50,000 I have to do it for a fourplex. And then, like I said, the rents, you've got $2,320 in rent, which is better than 1%.
Yep.
The rent to value is just unbelievable.
Yep.
And then when you're looking at the total return on investment, 34%, I mean, as we've talked before, you're not going to get that 34% on any other investment that I know of. I don't know anything about Bitcoin. Maybe you're getting those kind of returns there. I don't know. But I don't invest in things that I don't know about. But yeah, it's just looking overall. And then when you look at the gross equity income of the $16,000, and there's a number of formulas. We won't spend a lot of time on that because we've talked about that in previous videos. But look at the returns that you're getting on this one property for a less than $50,000 investment. Enough said. What else did you say?
To me, to break down the numbers just briefly by high level, monthly cash flow is already $831. 4 doors, 4 units, total income, gross rent $2,320. So anyway, monthly net cash flow at 25% down payment, even at an elevated 6.7 mortgage rate. One more thing, people, especially newbie investors, some of their many reasons to stay on the sideline is such that, I'm going to wait until perfect economic conditions before I'll buy a rental property. I'm going to wait until the mortgage rate comes down to 5% or 4%. I'm going to wait until the home prices drop by 40%. I will invest. Those are lame excuses.
Right.
The difference between 6.7% or 7.5% or 5%, 30-year fixed rate mortgage, and all said and done, it make a very little dent.
Yes, negligible. Yes,
on a cash flow.
And again, it's like I think people think they're being savvy by waiting till the interest rates come down. But guess what? There's a whole bunch of other people that are being savvy too, that are going to be, now you're going to be competing with a much larger pool of people. And again, as you have said before, we don't marry the interest rate. You can always refinance the interest rate. But the property, what's it not? Not that they don't have other properties, but that's a great investment right there. That's a great opportunity to invest.
Yeah. Here's a benchmark to your point, Julie. Here's a benchmark. Annual net cash flow almost
$10,000. That's a lot.
And then plus your principal reduction of $1,400 as an economic benefit because your renter is paying down your loan for you every single month. And then even a measly, cautious, conservative 3% annual appreciation rate, 3% multiplied by the purchase price equals $5,217 at the end of the first year in paper operation. So
absolutely,
we add those 3 numbers equals gross equity income of $16,601.
Right.
Simple mathematics, 6th grade math, 16 and multiplied by your total down payment, not multiplied by your purchase price, multiplied by your total down payment using the power of the 30-year fixed rate mortgage.
Right.
50 grand. So divide this into this equal at the end of the first year,
34%
total on this investment. And one more thing, this is just the first year. From the 2nd, 3rd, 4th, and 5th year to the 10th year, what's going to happen to those numbers down the road? Tell me, Julie.
Oh, they're going to increase for sure. They're going to increase because you're paying down the loan. You're getting the good point. The tenant is paying down the loan as evidenced by your $831 in cash flow. The tenant is paying the loan. And then as he's paying you're paying the loan down and your property value is going up, the mortgage is going down and the rents are going up. So so it's a win.
Over time now, there are some periods where any given year, your property may lose a little bit of value on paper. On paper.
Right.
If the paper loss, because as an investor, we're investing for the long term.
Exactly. And again, the point being made, even if the property value goes down, your rent doesn't. So who cares if it goes up or goes down? You buy it for $175, it goes down to $165. You're still getting the same amount of rent. But unless you're planning to sell it in a year, it doesn't really matter if it goes up or down.
Absolutely. Absolutely. So Julie, when you pulled the trigger 3 years ago, you, like I said, you and your husband, Mark, you were newbie, just like whole bunch of there. Most of today's newbie investors, inexperienced investors continue to wait in the sideline. So you didn't wait on the sideline. You pulled the trigger 3 years ago as a newbie investor. Now you have a total 6 property investor. But then, of course, you attended my Zoom class, and then you contacted me, and I worked with you. And then I coach you through the process. So tell me what's the next step for people out there.
No, I think take this information that you're showing on the screen and make a phone call. reach out because you don't know if you don't ask. And I think after, I will say this, I think the first seminar that we saw you in, maybe it was 3 hours. I can't remember if it was 3 or 4 hours. I will tell you, it was the best 3 or 4 hours that we've spent in our lifetime because it literally changed the course of our life from that point on. We went from having no property to now owning 6 properties that we will keep forever. There's no reason to give them up. They're great properties. They're solid properties. We work with a great team. We're in a good spot.
Yeah, not only that, Julie, you and Mark could retire now if you want to, but not ready.
Even-
Yeah.
Mhm.
Yeah. Mark is still working, your husband, and
Yeah, he's leaving now, so I'll just stand by.
he will earn the big bucks, and so
There you go.
continue to scale your portfolio. So
Absolutely.
appreciate that. Anyway,
Thank you.
yeah, as we conclude with this, if you guys see any value whatsoever from this presentation, please like and subscribe to my YouTube channel, and also put your email down on my website below so you can become a free member of our real estate investment network. So you
Absolutely.
get great free information on a consistent daily basis. You can get educated and informed. So at some point in time, especially newbie investors, you can take action, overcome fear. And for experienced investors out there, you can look into this type of investment methodology and scale your portfolio the same way that Julie.
Absolutely. 100%.
With that said, thank you very much for attending. Have a nice day.
Bye-bye.